Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what has been going on with the on-chain data and what is going on with the slightly bigger macro charts. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Let's make a start with everything though. Let's jump right down into this one. Let's start with the on-chain data. So up here we have three boxes. We have the exchange inflows, the exchange outflows, and then the difference between those two numbers. This is basically everything from the 1st of January 2023 through to the 26th of February 2023. Okay, so we can see that we've had 1.5529 million going onto the exchanges and 1.5483 million Bitcoin coming off the exchanges. This means that during 2023, more Bitcoin has gone onto the exchanges at the sum of 4,600 BTC. It's quite a small number. I said it before, I'll say it again. This is actually such a small number, you could almost argue it's completely neutral. It's not bullish, it's not bearish, but you know, it is swinging slightly in the favor of the bears at the moment. Ultimately, the more Bitcoin that goes onto the exchanges, the more supply there is for people to buy up. The more supply that there is for people to buy up, the higher the probability is that the supply will drown out the demand and price will drop to the downside. Now, this is highly visible from the Bitcoin exchange balance. You can see here that this line is essentially just creeping its way to the upside. We can also see it on the 30-day average bars of the difference between the numbers. We can see that during FTX, a lot of withdrawals were happening from the exchanges, then starts to flow all the way back on again. And as you can see right now, we're above the midline, which is essentially telling us that more Bitcoin is going onto the exchanges over a larger period of time, and therefore has basically now reversed any sort of accumulation that was going on. So ultimately, it's not looking overly positive from this metric for BTC. Just understanding, if you're following the money, you're following where the Bitcoin is going and where it's come from, then essentially you get a good idea as to whether or not you should be a bull or you should be a bear. Now, I'm going to give you the data, and it's entirely up to you how you kind of take that and whatever you want to be. You want to be a bullish, you want to be bearish, it's entirely up to you. So I'm not going to talk about the hodl waves, but essentially this is just us tracking whether or not there's any major shakeouts with long-term investors. For the most part, Bitcoin's just been aging here. There is nothing to be kind of too concerned with at this point in time for long-term holders. Let's move on to the inflows and the outflows. As you can kind of see, we have those inflows and those outflows very much matched up and very much a neutral market at the moment. Volume usually drops off the weekend here, and you can kind of see that being nice and steadily matched up, so nothing to concern ourselves with there. As we can see, the Bitcoin dust, these are the most vulnerable retail investors that hold just over 0.01 BTC. So when the black line, which is the number of wallets that have over 0.01 BTC, decreases, this is basically a lot of retail investors that are selling. You've got less now in your wallet than 0.01 Bitcoin, right? So you know that a lot of selling pressure has occurred here over the last little while. Hopefully people were in profit, but possibly not. So these, as I said, are the most vulnerable retail investors. So I do hope that they are doing okay. Now, essentially, on the high side, we peaked at 11,588,509 wallets that had over 0.01 BTC in them. We can see that we did drop down to a low down here at 11,472,388 wallets, and we can see that it did rally up just a fraction, 11,500,000, and then has started to pull back down again with 11,491,000. So you can see that there's a little bit of fluctuation occurring here with quite a big drop there for these retail investors. Now, as we kind of come up into the three other retail investor sized wallets, we have Krill, which is over 0.1 Bitcoin, Shrimp, which is over 1 Bitcoin, and Dolphins over 10 Bitcoin. As you can kind of see, the progression here is that you slowly become a high net worth individual, but you still act emotionally like a retail investor. You're not thinking like an institutional investor. Even with 10 Bitcoin, you still seem to react over emotionally to the price action. So what do we see see with these three wallets, where we see a steady increase for the most part of these retail investors who probably believe that they're in a bullish market. And basically, we can see a slight decrease here with the krill, again, vulnerable, just like the Bitcoin dust. We can see that these guys are obviously quite vulnerable retail investors as well. We can see the shrimps did fluctuate a little bit. We had a peak up here in January of 981,703, and we're at 982,537 at the moment. So we can see that we have got a slight increase on where we were. Accumulation has occurred even as we see the price fluctuating down and around a little bit. The same with the dolphins. You can see these guys steadily purchasing up. Now, as we come up into the smart money, the big big funds, the institutional funds, the billionaires, the multimillionaires, we can actually then start to get an idea as to kind of where the Bitcoin's coming from, right? Not only do we see Bitcoin dust wallets selling, which is okay, they can kind of fund a little bit of the movements for the retail investors, but we can also reflect on what's been going on with the sharks, which are over 100 Bitcoin, the whales, which are over 1,000 Bitcoin, and the kraken over 10,000 Bitcoin. These are the ones that are pretty much dictating the actual market direction, and we can see continuations of some selling pressure when it comes to the sharks. Again, they bought up Bitcoin way ahead of the pump, right? They started accumulating in early December of BTC, and we were saying at the time it seemed unusual. Maybe they knew something that we didn't. Maybe they were making a catastrophic mistake, but for the most part, these guys clearly knew what they were doing, and now they're in profit taking mode. You can see that wallets are slowly decreasing here as profits are getting taken off the table from these traders. The whales continue to sell. There was a new all-time low in this bear market for the number of whales actually operating with BTC. This happened on the 25th of February 2023 with 2,022 wallets. A slight increase over the weekend up to 2,027. So to kind of just zoom in on that just one second, this one here, we can see that the low for the price action was November, okay, and we can see that here. At this point in time, there were 2,103 wallets, right, and they continue to decrease their positions as black line continuing to come down all the way to this new low that we have over here. So the same question that I often ask is, okay, if the bottom was in November, then why were these whales selling the bottom? After all, it's the whales that dictate the market direction, and if they were selling into this pump to the upside and continue to do so, then we should probably be questioning why we think, or why they're doing this and why we think they're doing this, essentially, because it doesn't make sense to be selling a bottom, does it? But let's go back to our wallets here and take a look at the Kraken sized wallet, which is over 10,000 BTC. So this is a significant sized wallet. I often refer to these guys as cold storage for whales, essentially. At the moment, we are rocking 115 wallets with over 10,000 BTC in them, and we can see that it's been fluctuating around a little bit. Now, if I scale this out in a 365-day view, this is what it looks like. Okay, so during this entire bear market, they've been accumulating Bitcoin. They've seen a few fluctuations here and there. You can argue that they kind of brought down the market in June. You can see that they started to maybe bring the market down here in August. And of course, you can see that they really were kind of trying to pull the market down, or were selling into people who believed that the bottom was in over this side in late November, right? And basically, they're just kind of been slowly kind of trading sideways. Now, you can argue, and it's quite visible on this this larger view, that this is a change of characteristic for this wallet during this bear market, because actually it started to decrease. Okay, there was a peak here in the 4th of January 2023 at 118, and we haven't really been able to pierce higher than that. So we can argue that this is slowly eking its way to the downside, and retail investors are the ones that are purchasing up this Bitcoin, which is incredibly unusual. Now, when we take a look at the Kraken size wallet and we start thinking, okay, well, why was it accumulating during this bear market just to sell it off now? And well, for that, we'd have to go back to 2018, and this is what the Kraken size wallet looked like in 2018. Essentially, it accumulated during the entire bear market and then flooded the market with excess Bitcoin right actually at the end of the bear market, bringing in the bear market low. Now, there were a couple of fluctuations, and I think we could be somewhere in this little range right here where we started to trade sideways and started to come down a little bit of a push upwards, and then flooded the market. The only difference is, though, is that during this flat period of time right here where this starts to descend, we actually see the whales buying. Okay, if I come over to here, you can see that the whales were buying during this flat period, which obviously during this flat period here, we are not really seeing on the current timeframes. In fact, if I come back to here, we can see that there's no real buying from our whales and in current times. Okay, so although the 2018 data says that whilst we were trading sideways, retail investors were selling and whales were buying and then crack and dumped, we don't see that. In fact, all we're seeing at the moment is a continuation of this selling pressure from these whales and basically continued buying pressure from the shrimps, with basically just sideways trading on the Kraken at the moment. So I think the market is incredibly fragile. There's a lot of things to kind of consider. And when we kind of think about where the money is flowing or where the Bitcoin is flowing, you've got the smallest retail investors kind of struggling a little bit. They're the first to kind of go and first to kind of crumble under the pressure. And I think we're slowly going to start seeing this kind of creep up these retail investor wallets. And as such, we'll start seeing an increase with the whale size wallets before the Kraken decides it wants to flood the market and bring in the actual bear market low. So overall, the on-chain data gives us a pretty clear picture, at least in my opinion. But let me know what your thoughts are in the comments below. Let's jump down into some smart money concepts here for a second, because there are some interesting things that are going on. Now, this is the monthly chart, Bitcoin USDT pair, and Binance as the data source. Now, we have got two imbalances in the order books. Okay, we have this one here. Okay, and this one basically comes in at the 18,400 up to the high of 21,400. Okay, that's this one. Then there's this one. This is the one that I'm really interested in because Elliott Wave Theory has pointed out this area for quite some time. 14,000 up to a high up here of around 17,600. So this area was a gap that was left behind back in November 2020. Okay, so basically this gap here has been in place since November 2020. We tapped on the higher side of it with a double bottom since December of 2020. Then we came down with the FTX kind of move, but we've yet to fill it out completely. So a next move down could be really interesting to see whether or not this gaps gets filled out. And then, of course, looking at the monthly chart, we've filled all those gaps ready for this bigger move to the upside, at least on our Bitcoin USDT Binance chart on the monthly. Okay, so it's looking pretty interesting. The other thing that's also interesting here is we have this break of structure to the downside, yet is yet to be breached and yet to kind of change characteristic to the upside. Equilibrium is quite high, around 35k, with some consolidation there. I don't think we'll be pushing that high, but you know, we'll see how that kind of goes out. But essentially, to me, this looks like we are still in a bearish market. We can't get ourselves too excited too quickly, not considering, you know, everything I've just spoken about with the on-chain data and the fact that it's only really been propped up. This market's only really been propped up by retail investors, and basically big funds are not really backing Bitcoin at the moment, and therefore we can't expect Bitcoin to go to the moon if it hasn't got big financial backing. And that seems really, you know, counterintuitive, but it is what it is. And essentially, a lot of retail investors are going to get bored, fed up, or require the funds before big money is even going to be able to come in here. There's always a buyer, there's always a seller, and at the moment, retail has been buying up Bitcoin from the big funds. We can now see that there's more Bitcoin on the exchanges than demand is potentially looking at soaking up, and the demand is about 1 million short of where the 2019 bull market started. So if I do bring back some data for the on-chain side of things, let me just find this one right here. As we can kind of see, we had 2.45 million going onto the exchanges and 2.43 million coming off the exchanges during the previous start of the bullish market. This is 2019, and at the moment, where are we? We're at 1.5, right? So we know that we're about 1 million short on where we were previously. So knowing that the volumes are significantly lower, knowing that big money is not really buying Bitcoin but is quite happy to sell it, looking at more positive Bitcoin on exchanges rather than negative Bitcoin on exchanges, indicating that the supply is outpacing that of of the demand. Basically, these are the definitions of a bearish market, not a bullish one. So understanding that the market structure is also looking bearish, both on the weekly, monthly. There's a few short-term bullishness stuff going on the smaller time frames. We can't ignore that. But essentially, the bigger macro picture remains the same. Unfortunately, it isn't a time for a bull market. But let me know what your thoughts are in the comments down below. Really interested to kind of get the thoughts and opinions of the community. If you found this useful, hit the like button. If you're new to the channel, subscribe. And don't forget, guys, join us down in Discord if you haven't done so already. Until the next one, though, guys, have a fantastic day.